Tesla, the electric car maker, was once a Wall Street darling. Investors couldn't get enough of Elon Musk and his innovative company. Fast forward to 2025 and the story is very different. Tesla is now the biggest market loser among the Magnificent Seven tech giants. This group, which also includes Apple and Amazon, has lost trillions in value. But Tesla's 34% decline is particularly shocking. What went wrong? The answer is a perfect storm of challenges. Trump's return to the White House brought back his controversial tariffs. These tariffs are like taxes on goods imported into the US. They have increased costs for many companies, including Tesla. This has made Tesla's cars more expensive. Consumers are feeling the pinch. At the same time, competition in the electric vehicle market is heating up. The Magnificent Seven have seen better days. These seven tech giants have lost a staggering $2 trillion in market value since April 2, 2025. The culprit? You guessed it, Trump's tariffs. These tariffs, particularly those targeting China, have sent shockwaves through the tech sector. The tariffs have created uncertainty and increased costs. This is bad news for investors. A 90-day pause on some tariffs offered a short-lived reprieve. The market value jumped by $1.5 trillion. But the relief was temporary. Trump's tariffs have wreaked havoc on the stock market. The tech sector, heavily reliant on global supply chains, has been hit particularly hard. Retail and automotive sectors are also feeling the pain. These tariffs have added fuel to the fire of inflation. Production costs have skyrocketed. Companies are forced to pass these costs on to consumers, leading to higher prices for everything from cars to clothing. The tariffs are a major headache for businesses. Companies are scrambling to adjust their supply chains to avoid the tariffs. But this is expensive and time-consuming. Some companies have resorted to passing the increased costs on to consumers. This is risky because it could lead to lower demand for their products. The tariffs have created a lose-lose situation for businesses and consumers alike. The impact of Trump's tariffs extends far beyond Tesla. Nvidia, another tech giant and a member of the Magnificent Seven, is also feeling the heat. Despite a recent surge, Nvidia is down 20% year-to-date. The company is facing fierce competition from China's DeepSeek AI. This is a stark reminder that the trade war with China is far from over. Tesla isn't just battling external pressures like tariffs and competition. The company is also grappling with internal challenges. Production costs have been rising, squeezing Tesla's profit margins. This is partly due to the global supply chain disruptions caused by the tariffs. But Tesla has also faced its own share of manufacturing hiccups. The electric vehicle market is becoming increasingly crowded. Tesla is no longer the only game in town. Established automakers like Ford and Volkswagen are aggressively expanding their electric vehicle offerings. These companies have deep pockets and decades of experience in manufacturing cars. Tesla is facing a real fight to maintain its market share. Competition is good for consumers, but it can be brutal for businesses. Tesla needs to innovate and adapt to stay ahead of the curve. The company needs to streamline its production processes to control costs. Tesla also needs to continue to differentiate its products from the competition. This will require significant investment in research and development. Investors are jittery. The market is volatile, and there's a sense of uncertainty in the air. The tariffs have spooked investors, and many are fleeing to safer assets like bonds and gold. The Biden administration is under pressure to address the economic fallout from the tariffs, but so far no concrete actions have been taken. The road ahead for Tesla and the broader tech sector looks bumpy. Analysts predict continued market struggles in the short term. The tariffs are like a dark cloud hanging over the economy. Long-term recovery will depend on resolving trade tensions and companies adapting to the new economic landscape. The future of Tesla remains uncertain. The company needs to navigate a complex web of challenges, from tariffs to competition to internal production issues.